Welcome, dear traders. It's me, Kate Stichin, and you're watching a recap of the Asian session on June 16. Risk appetite returned on Wall Street after searching the US stock indexes. Australian and the New Zealand equities advanced as well. Japanese stocks again showed the opposite trend. After a rise to a 33-year high, they retreated at the end of the week due to the profit taken. Optimism in the stock markets is usually fueled by the decision of central banks, and the Asia-Pacific region is the powerhouse of global economic growth. It includes the world's second and third largest economies. China and Japan have already announced their rate decisions this week. Both decisions were dovish. While China's central bank is trying to propel an economic expansion, the Bank of Japan has kept the interest rate at minus 0.1% for more than 10 years. And today, the Bank of Japan maintained its minus 0.1% short-term interest rate target and a 0.5% cap on the 10-year bond yield. Kazuo Ueda said that inflation should slow down at the end of this year, but uncertainty over the economy is very high. Core inflation in the country reached 3.4% in April, staying above the Bank of Japan's target for over a year. It keeps alive market expectations that the regulator could adjust monetary policy this year. Moreover, most of the top central banks stick to a hawkish stance. Central Bank of Australia and Canada unexpectedly raised the benchmark rate. Yesterday, the ECB made the same move, and the regulator raised the key rate to a 22-year high. It also hinted at further rate hikes. The Bank of England is expected to raise the rate next week. Although the Fed skipped a rate increase in June, it sticks to aggressive tightening. Yesterday, the US unveiled weak economic reports, fueling expectations of a policy reversal by the Fed. Production at the US factories almost stalled in May as the manufacturing struggled due to higher interest rates. Weekly initial jobless claims exceeded forecasts for the first time. It means that economic activity in the country is slowing down, and the labor market is cooling, and inflation is decreasing, and the US dollar fell across the board due to these factors and the strong bullish trend perked by its main rivals. After the data was released, it decreased to a monthly low of 102 points. However, during the Asian session, the US dollar rebounded to 102.30 amid growing US Treasury notes. However, in general, the greenback was trading near its 5-week low in the range of 102 and 102.30. Any strong upward movement seems limited due to expectations of the end of the Fed's tightening cycle. On a Friday morning, the US dollar looked a sharp weekly decline against the euro and the pound sterling and commodity currencies. Only the yen failed to advance amid the US dollar's weakness. In the morning, it was moving in the upward range of 139.80 and 141.40. Since the Bank of Japan remains committed to an ultra-low stance, the low-yielding yen will continue to depreciate. The intervention of the Bank of Japan will hardly take place. In the Asian trade, bulls took full control of the dollar-yen pair. It jumped to 141.30. Interestingly, the yen is losing momentum mainly versus currencies whose central banks maintain aggressive tightening. Yet it's more or less strong against the US and the New Zealand dollar. Despite the recent jump, the dollar-yen pair remains inside the bearish range formed more than 3 months ago. Any intraday drop in the exchange rate could be considered a signal for opening long positions. The Australian dollar halted its upward movement today after a modest rise in the greenback. As a result, the Aussie slid into the price corridor of 0.6867 and 0.6902 due to strong bearish pressure. After a sharp increase to 0.6900, a high over February 22, the AUD-USD pair fell to 0.6879. The Australian dollar, which has been rising amid optimism on Wall Street, lost momentum today due to a rebound of the US dollar and fallen oil prices. However, the upside potential of the US dollar will be limited by uncertainty over the Fed's monetary policy. To some extent, it may help the Aussie avoid significant losses. The New Zealand dollar was trading in the upward range of 0.6222 and 0.6248. The Kiwi consolidated at its three-week high, trying to expand its three-session winning streak. Despite the fact that New Zealand has entered a technical recession, the government is confident that it will be short-lived. It improved market sentiment. As a result, the Kiwi may end the week with an almost 2% increase. At the end of the Asian session, it rose to 0.6237, moving higher. We hope your positions are profitable at the end of the week. And that's all for now. We wish you a productive Friday. Please leave your comments down below and see you soon.